Since that big acquisition costing $13.6 billion, how's integration been and what synergies have you seen so far?
So we've seen some really good start. Any integration of this size is typically about 2 to 3 year process, but first few months have been very positive, both in people integration, cultural integration part, and the results we're starting to see from consumers' point of view. We are signing record number of loyalty members every single month. We have just crossed the 100 million loyal member threshold across the globe, and we are seeing that reflect in the numbers as well, that customers are preferring to travel and use the extensive distribution network that Marriott now offers across the world, and specifically in Asia Pacific.
But you now have 30 brands under one roof. It sounds like it is one too many, yet you say you'll keep all of them. What's the thinking behind that?
Well, we see opportunities across the board, and particularly when you look at Asia, as Asian market grows, intra-Asia travel is going to be considerable. Our brands today, we offer great distribution across all lodging segments. So when you look at luxury with Bulgari, Ritz-Carlton, St. Regis, when you look at the mid-market space with the Courtyard, 4 Points, you look at moderate price tier brands with Moxy, which is a lifestyle brand, Fairfield by Marriott. We are offering great brands in almost every lodging segment there is, and that gives the customer the choice. As they travel, they can go to luxury or full service, or if they prefer to stay in a Moxy style lifestyle hotel, they're more than welcome to do that as well.
But technology is changing the way consumers behave. Take Airbnb, for instance. 60 million users, 1 million hosts, yet zero assets. How do you compete with a player like Airbnb?
So for us, scale matters. We have seen across the board now 6,100 plus hotels in 123 odd countries. We genuinely see the potential as we grow in each of these markets. Airbnb, in Asia at least, while we compete globally in many markets, in Asia, they almost attract a different customer. There is heavy focus on...
So you're saying Airbnb is not a competitor?
I wouldn't say they're not...
6 million users.
I wouldn't say they're not a competitor, but they are almost attracting a different customer here because our numbers are seeing record growth across Asia Pacific, and in fact across the world. But specifically in Asia, there's still heavy focus on life safety, which hotels tend to be better positioned at, and we believe genuinely that the unique experiences that we offer, the loyalty that our customers deliver to us is going to reap results.
You said it's about scale. You are now the top player, the biggest player in the space. Are you looking for more M&As? Would that make sense?
So historically, Marriott has grown through M&As. When you look at in the 90s, acquisition of Ritz-Carlton, Renaissance, moving forward, regional acquisitions of brands like AC, Protea, Delta, and Starwood being the biggest. So we would never say that we are done in the M&A world. We'll continue to look at opportunities, but they've got to be the right opportunity for us.
What are the opportunities in emerging markets like India, like Indonesia? What brands would work for those markets?
So we see growth across the portfolio of our brands. As these markets generate more wealth, economies grow, middle class just starts to travel. When you just look at the Asian part of the world, in the next few years, there's going to be 125 million middle class players. You look at China outbound.
So that would mean your Courtyard brand would do well because it targets mainly the middle class.
So in the secondary, tertiary markets, we see great growth opportunities in the mid-market and moderate price tier brands. But at the same time, we're also seeing great growth in luxury product because luxury today is one of the fastest growing segments in the industry.
The company has said that it's planning to add about 2,000 jobs in Singapore over the next few years. Where are we on that? And are you planning to increase headcount in this part of the world?
So as Marriott and Starwood came together, Starwood was headquartered out of Singapore. Marriott was headquartered for Asia out of Hong Kong. And now we have really set up 3 hubs. A hub, Hong Kong being still our regional headquarters, but Singapore is a big hub. We now operate 11 hotels in Singapore alone. We have 3 more coming up, and a number of other opportunities that we are looking at in the market broadly. So we genuinely believe that in terms of Singapore as a market, it's a hub for Asia. There is considerable growth opportunities, and we'll continue to add more and more jobs in that market.
Can you quantify how many more jobs can be expected, not just in Singapore, but the rest of Asia?
So across this year, we will add well over 20,000 jobs in APEC alone. We see considerable growth as we grow. In Asia, across Asia, we are seeing 80-odd hotels open this year. In APEC, which is the part of the world I'm responsible for, excluding China, we will open 43 hotels. And all of these hotels mean more jobs and mean more engagement with the community, mean more growth for the local economies.
One of the topics here is the future of digital and how the digital economy will drive growth going forward. How does Marriott intend to become a 21st century company? What investments are you making?
So over many years, the company has invested heavily in our own digital platforms, be it Marriott.com, or our recent investment in PlacePass, strategic partnerships that we have with Alipay. As you look at moving forward, our mobile app is considered to be one of the best in the industry. Today, our consumers can actually order room service before they physically get to the hotel, through mobile chat mechanisms. So there's been a lot of investment, and we believe it's going to be a strategic advantage as we move forward in creating unique experiences for our customers as they travel around the world.
All right.